If you checked your phone at all this weekend, you already know the world looks very different than it did on Friday.
Yeah, that is a massive understatement.
Right. It is Sunday morning, March 1st, 2026, and we are looking at a full-on wartime scenario following the death of the Iranian supreme leader. The Strait of Hormuz is closed, and the screens are just flashing red.
They are, and honestly, that is the exact mission for today's deep dive. We need to decode all this unprecedented volatility and these massive gap projections before the global markets actually open on Monday.
So let's start right there with that term gap. I am seeing it everywhere this morning. What exactly are we bracing for?
Well, in trading, a gap happens when massive news breaks while markets are closed,
Yeah.
like over a weekend. The price doesn't just drift from Friday to Monday, it literally jumps.
Leaving a literal gap on the chart.
Exactly. And right now, the biggest gap we're tracking is oil.
Because of the Strait of Hormuz closure.
Yeah.
Brent Crude jumped 10% in over-the-counter, trading to $80 a barrel.
Right, and we are expecting Monday's open to push near $100 a barrel. It is an immediate supply shock response.
$100 oil. That changes the math on everything. And, when panic hits like this, investors usually run straight to gold.
Oh, they are definitely running. Gold is already trading over $5,280 an ounce.
Wow.
Yeah, and analysts are expecting a gap up to 54.50, maybe even retesting that 5,600 record.
And silver closed at, $93.66? It is threatening that psychological $100 barrier.
It is a textbook flight to safety. People are terrified that fiat currency is going to lose value rapidly in this environment, so they're buying up hard assets.
Which naturally brings us to equities. If they are piling into gold, they are dumping stocks.
Very aggressively. This is a massive risk-off rotation. Wall Street is bracing for a really brutal open.
Because the Dow already tumbled 700 points on Friday.
Right, and futures suggest another 1.5 to 2.5% drop at the bell. S&P futures are down to 68.75.
But, and this is interesting, not everything is tanking. The defense sector is actually green.
Yeah, the defense outperformers. With Operation Epic Fury entering its second day, companies like Lockheed Martin and Northrop Grumman are projected to gain 5 to 10%.
Right. War means guaranteed government contracts, even while tech stocks get crushed under the inflation fears. I see the NASDAQ is down at 24,856.
Exactly. Tech is super vulnerable right now.
Mm.
But what is really fascinating is what is happening with crypto.
That is the part that confused me. The fear and greed index is at 14.
Extreme fear.
Right, extreme fear. Normally that destroys speculative assets, but Bitcoin is actually up 2.6% to 67,545.
Yes, and Ethereum is doing even better, surging nearly 6% to over $2,030. It is a wild paradox. Crypto is acting more like digital gold.
So why is Ethereum outperforming Bitcoin here?
Utility. Think about it. In a heavy sanction environment where traditional bank accounts get frozen, Ethereum's network lets people move value completely outside the traditional banking system.
That makes total sense. And speaking of the banking system, the U.S. dollar is strengthening, which is normal for a crisis. But the Iranian rial...
It is an absolute freefall.
Over 1.75 million to the dollar on the open market. That is just instantaneous hyperinflation.
Which proves the crypto point, right? When your national currency collapses overnight, you look for alternatives that governments cannot print.
Right. So one last puzzle piece before we wrap up. Usually in a panic, everyone buys U.S. Treasuries and yields drop. But the 10-year yield is just stuffed near 4%. Why aren't people buying bonds?
That goes right back to the $100 oil.
Because of inflation.
Exactly. Oil drives up the price of everything. If you lock in a 4% bond, but energy costs push inflation to 6%, you are actually losing money. The bond market is terrified of stagflation.
Low growth, high prices. A tough pill to swallow. So we have soaring oil, spiking gold, dropping tech stocks, and stubborn yields. For the listener trying to process all this, what is the key thing to watch?
Watch the Asian market open at 6 p.m. Eastern today, plus the upcoming OPEC Plus meeting about production hikes. That 6 p.m. open is our first look at truly liquid pricing.
It sets the tempo. Well, it is going to be a historic week, but I want to leave you with a final thought to mull over.
Go for it.
We are watching gold chase records while crypto absolutely defies extreme fear. In a modern geopolitical crisis, has the definition of a safe haven fundamentally shifted?
That is the big question. Are we moving away from physical vaults to decentralized code?
Something to think about as you watch the charts this week. Thanks for diving in with us.